stacking dies. Market does the unthinkable. I visited my local coin shop yesterday and was shocked to hear my dealer say silver stacking is dead. Yes, a silver dealer saying that. In this video, I'm going to break this down and show the massive shift in the market is changing silver as we know it. My dealer told me that since we had this bump up in silver price a few weeks ago, he has seen a sharp decline of regular, everyday silver stackers buying small increments of silver. That's a mouthful of words to say, you and I are not stacking silver. He has, however, he's seen a shift into wealthier people buying up larger quantities of silver, monster boxes, piles of bars. There have been major changes in the economy. And when we look closer, it makes sense that the silver market is changing. The problem is twofold. Apartment values have declined 30% since 2022. When we look at the silver market, real estate is the elephant in the room. It is absolutely the elephant in the room. The 30% decline since 2022 for apartment values. The real estate is the other tangible asset. And this is what people, if you have a large sum of money and you don't have that investor mindset, typically you're either going into real estate to have a hard asset, to have something tangible, or you're going into precious metals. You're going into this silver that I'm showing on my screen. Like those are your options. And presently, with interest rates remaining where they are, and with this issue of commercial real estate just beginning to erupt, that is impacting the private home sector, because typically commercial real estate takes the lead and then the private home sector follows. So if things are going well for commercial real estate, we will see a lag, just like gold. When things go well for gold, when gold is going up, we see a lag, and then silver will move up. The market will move. Same thing. It's the same for real estate. And now we are experiencing, we're living that out presently, because the private home sector is not selling the way it should be, and this is their peak season. But with interest rates above 7% for a mortgage rate above 7%, no, it's not happening. The other issue for silver are the reports that came out this week from the Fed, and this is from Reuters. This says weaker U.S. jobs data soothes Fed worries of renewed overheating. And the article starts by saying Federal Reserve officials, buffeted by concerns the economy might again overheat, got relief on Friday when jobs data for April showed a marked cooling in wage growth and a pace of hiring in line with levels seen before the COVID-19 pandemic. The gain of 175,000 payroll jobs last month was the lowest since October of 2023, while the 3.9% annual change in average hourly earnings was the smallest since May of 2021 and continued what has been a steady decline toward the mid 3% range, which policymakers feel is consistent with their 2% inflation target. Now, it's easy to feel like this carrot that is being held out for us, this 2% inflation target, is just exactly that, a carrot that we're constantly reaching for and we're never getting to. But really, the data that came out it's not just Powell. It's easy to find an evil villain and point at Powell and be frustrated with his moves, but all these central bankers are all watching this very closely. This article continues and says, Fed Governor Michelle Bowman, who has been among the more ardent voices on the steps needed to control inflation, said after the release of the data that her outlook remained that inflation will decline further with the policy rate held steady. And that's frustrating for us as silver stackers, because as we keep the interest rate stagnant, what we are seeing is our silver price is going back to being stagnant. It's going back to the past 2 years that we've had when this metal was hovering between $22, $24. At best we could get up to $25 over the past 2 years. It's just stagnant. And as we see interest rates remaining and holding steady, that's what we're starting to live out. And a lot of silver stackers are feeling frustrated. We saw that nice reach up. We were almost at 30, we're tagging $30. We're almost at $30 an ounce. And now we're starting to settle at, a high $26, almost $27. And I think that most of us as silver stackers, we're holding. We're just waiting. I mean, me personally, I bought I'll grab my rounds that I bought this week. I went in, here's some more rounds. There's another set of rounds that I bought. I went in and bought more rounds this week, but and this according to not just my local coin shop that I go to near where I live, there are actually quite a few coin shops in my area they're within driving distance, and the other dealers are telling me the same thing, that they're seeing people make some big purchases, and this is most likely the fear missing out crowd, making literally monster boxes, large purchases, and just piles of $10 bars, right? These are big purchases that you and I, as regular silver stackers, regular people who just, we put aside some money every week, some money every month, and we buy what we can, and then slow and steady, we build our stack. We're not walking into the shop the way we typically were before silver started to move. And I think many people are in this holding pattern. Many silver stackers are in this holding pattern, waiting to see what's going to happen. And when we see the Fed go pivot and turn back on that plan to make cuts, and we see silver start to remain stagnant at this $26 to $27 range, not really moving, I don't think I'm alone when I say that we're getting that eerie feeling that silver is going back to the past 2 years that we've had, that long stretch. Let's continue with this article. This says, traders responded to the jobs data by adding to bets that the Fed will deliver its first rate cut in September. Well, good luck. And likely follow with a second quarter percentage point cut in December. This is Wall Street typically responds immediately to any announcement from the Fed. And so this is not a surprise. The article says, both probabilities have been sliding as inflation data ran hotter than anticipated, and Fed officials at their April 30th to May 1st meeting noted the lack of recent progress in lowering the pace of price increases. Other data, such as slowdown in overall output, was dismissed as masking strong underlying demand, while a weak productivity reading for the first 3 months of the year raised the possibility that a key force helping to slow inflation may be of less assistance in the months ahead. But Fed Chair Jerome Powell, in his post-meeting press conference on Wednesday, cited an array of indicators he felt showed the labor market moving toward better alignment between the hiring demands of employers and the number of people looking for jobs. So this issue of the tight labor market, the Fed is just waiting for it to loosen up a little. They're waiting because the fear is that with such a tight labor market, wages will remain high, which is what we want as regular people. We want those wages. That is being blamed presently. There's always something that we could point to, but that presently is being blamed as the reason for prices remaining high, because the tight labor market is keeping wages up. The article says, data on job openings, the rate of which workers are quitting jobs, and the pace at which firms are hiring have all indicated some softening in the labor market. And that's what the Fed has been waiting for. But still, with all this, I'm not going to go deep in the weeds with all these numbers that this article presents. But what this data is showing is that, yes, the Fed is holding out. And as the interest rate remains stagnant, that's what we're seeing reflected in our silver price. That it is if it hovers, if it remains stagnant at $26 to $27, then maybe we will have to accept that as our new normal. By the way, if you're enjoying this video, please hit like, hit subscribe. I always forget to say that. It really makes a big difference. Hit those buttons. That might be our new normal. We may have to look at how we've been living the past 2 years and stacking silver, with that level of $22 to $24. This $26 spot, this might be our new level. We might be hovering between $26 and $28.